and welcome to Solving Locally Talk, conversations about prosperity in Africa. Today, I'm super excited to dive into conversation with Sam Tayengwa of TransUnion Rwanda about the African consumers. Sam, welcome to the show, and thank you so much for taking time.
Thank you, Tracy, and it's a pleasure to join you and discuss with you on the African Renaissance.
Thank you. You know, Sam, I am so excited to talk with you today because I want to learn everything I can about the African consumer. With a population at almost 1.7 billion people, I really believe the African consumers are Africa's untapped superpower. But you know what, before we dive into that, would you mind just telling us a little bit about yourself and your work with TransUnion Rwanda?
Amazing, Tracy. So, my name is Sam Tayengwa. Currently, I'm the CEO of TransUnion in Rwanda. So for those that might not know, Rwanda is in the eastern bloc of the continent. And we usually call it the gateway also to the heart of Africa because there's Rwanda, Malawi, Kenya, and so forth. And I've been with the business for about 13 years now, just over a decade. And I've done quite a lot of work within our African space. Very much passionate about, the empowerment of our African consumers. Very much passionate about, the whole African Renaissance, giving visibility to the excluded populace of our societies, getting them back to normality, getting them access to financing. So I'm very passionate about those things. And that's the kind of work I do with TransUnion. That's what keeps me at work at night. So I love what I do. Yeah.
Oh, awesome. So we both have that passion around elevating Africa's economic landscape. So help me understand a little bit about Africa, Rwanda specifically, of course, the credit landscape in the country, in the continent.
Yeah. Well, if I can take it a little bit, like just a step back, I always mention that Africa is not a homogeneous country. I mean, you got about 56 states, and all different states, different regulation, different political dimensions, different demographic dividend structures, very much different. It's not one unique country, right? And with that said, it brings a lot of, excitement to the opportunities that each of these countries present. Some of the countries were liberated earlier than others. And with that, certain nuances in terms of economic growth, in terms of education, obviously changed that landscape. You'll have a country like Ghana, for instance, in the Western Bloc. Obviously, they had their independence way earlier than other countries, and that transformed their way of being and their way of living. South Africa, though attained independence in 1994, but the economic structure totally different to the rest of other countries on the continent. So if you look at that, you realize that the curve is not equitable. It's not a straight line, right? Mm-hmm. You got other countries that have matured in terms of the credit landscape, right? In the Southern Bloc, you will look at South Africa, and that has influenced, other countries around it like Namibia, Botswana, Eswatini. They follow the economic trajectory of South Africa. Very much mature credit landscape. You've got your big financial institutions that sit in that space. Now, if you move into your Eastern Bloc, you've got Kenya, which obviously, really moved into the digital landscape, transformed most of its financial institutions through digital enablement. And with that said, necessitated the ability for most people to get access to credit through digital enablement. They actually used to call Kenya Silicon Valley or Silicon Savannah, something like that. Yeah. Right. And then you then come to Rwanda, a very small country, about 13.5 million people, 8.5 that are what we call credit active, or rather economically active adults, but still follow the economic trajectory of a big economy like Kenya. So that's how most of these countries primarily, sort of transcend in terms of their financial or in terms of their economic journey across the continent. But one point that I want to bring out, Tracy, whilst we talk about that, is most African markets were predominantly cash-driven. So credit is a new influence to most of the consumers on the continent. I mean, I'll give you a country like Zimbabwe, where originally I was born. You'll find that folks will actually own a house that is not bought on credit, that's not mortgaged, right? Folks will get a car that is not, financed. They'll save and get a car. But obviously that is now started to change because there's a lot of economic emancipation. People are getting aware of the financial institutions' obligations and ability to empower them. So that just kind of sets the scene that it's not a one-size-fits-all across the continent. Some nations way ahead of others, some following closely, and some still in their entry levels. But with all of that, the one topical conversation on the continent is financial inclusion, and I'm sure we can maybe talk on that a little bit later. And that is the empowerment, the inclusion, the enabling of historically disadvantaged, historically excluded, structurally, by whatever virtue that could have influenced that exclusion, to be brought into the financial ecosystem so that they can participate, they can be empowered, and they can share in the discourse. That sort of just sets the landscape, Tracy, of what the African, credit market or landscape sort of looks like.
I appreciate that.
Yeah.
So, and for the purposes of this conversation, I think let's really focus on East Africa, because that's where I have more expertise. That's where I've traveled. SolvingLocally has an office in Rwanda. So I really appreciate you giving us the context of that credit evolution. So I'm just curious, you said that Kenya is really leading the way with the digital footprint, right?
Yeah.
How is that? So how will I see that? I know Rwanda has a very ambitious economic development plan, and they've made a lot of inroads in that. Very impressive, in fact.
Absolutely.
So how is the government viewing credit, right? Is that something that they want to develop more, to expand more? Because obviously from an investment landscape, that's something investors want to look at.
Yeah, so I mean, spot on, Tracy, like you mentioned. So I was actually going to sort of deep dive a little bit into the East African or the Rwanda landscape, but juxtapose it with the closer countries like Kenya, because they share a lot of similar credit, nuances. But if you look at Rwanda, like I mentioned earlier on, very small country in terms of the population, 13.5 million people. The government is very intentional about financial inclusion, and the focus is not leaving a human behind, but as you bring everybody across, as you bring everybody on this credit journey, you need to dignify them, right? So now we don't just talk of financial inclusion, we talk of deepening inclusion, we talk of quality inclusion. You don't just give a person ability to get $10 or $50. It's about the transformative journey on the populace. Right. How do you really empower the populace according to the economic metrics in the country? So, for instance, look at your GDP enablers, right? Be it agriculture, which is one of the biggest in Rwanda. The government is focused on empowering farmers. Now, you don't just empower the farmers, you need to work within the whole, value chain. And that value chain starts with, your inputs. How do you ensure that the farmers get the right inputs before any harvest? I mean, before any season, any growth season. And the banks have been brought in to that playbook to say, we need you to participate in the empowering of the farmers so that the produce can be quality. That's one aspect of it. You go to service, right? And as one of the GDP contributors, it's about how do you empower the people in the service sector to produce better or to do better services and products. So when you look at it, the government is very intentional about where it wants the focus to be at. So financial inclusion is a critical component of what the Rwanda government is focused on, is a critical component of what, the financial institutions have been tasked I've got a project, Tracy, I'm working with a central bank in Rwanda, and primarily is to empower women and SMMEs, you see. And the empowerment is still talking about enabling their ability to get access to finance.
So what does that look like as far as tools? So I'm assuming that a big part of that in financial inclusion is building the awareness, first and foremost, education, but then developing specific tools to be able to include this particular populace. Right?
You're spot on, right? So financial literacy is one of the critical component of that, because if you look at the Rwanda economy, I mean, still very much, the split between urban and rural is still a bit of a workaround, right? So you've got very few people in the urban structures compared to your rural structures. So the financial literal aspect is very, very critical to that enablement, right? So, and the tools we are using to identify the excluded, and I'm glad, I think you mentioned it earlier on, is understanding the data points that brings the visibility of the excluded populace. So I'll give you an example, Tracy. One of the most available tools is a cell phone, right? Every person has a cell phone. And in East Africa, primarily, one of the critical things the telcos were able to do was to create what we call mobile wallets. So I might not even need a bank account, right? As long as I have a mobile wallet, I can be able to transact. We call it either Momo, which is one of the biggest telco here, or Airtel Money, the other telco in Rwanda. You have an ability to receive money. You have an ability to send money through your mobile number. You have an ability to purchase products, goods, services through your mobile number. So you find a person is visible in that framework, but not necessarily in the banking side.
Yes. So
that we need to harness the power of that data and make it visible to the financial, credit landscape, so that they can understand Sam's financial, ability, obligations outside of the financial structured ecosystem. So those are some of the tools we're using.
So then that takes me to my next question. So looking at it through an investor lens, a foreign investor lens, right? So I'm a potential investor. I'm looking to invest in an African company or potentially expand my market into an African country. So what data is readily available for me to help inform my decisions right now, currently?
Well, good question. Any financial data is available, Tracy, whether financial data for individuals, whether financial data for corporates. Right? What we're trying to bring out to the surface now is data for SMMEs. SMMEs are typically unstructured in the way they run businesses. So, but we've seen that they participate a lot within the telco-enabled environment, like I was mentioning on Momo. Every SMME has what we call a merchant code. That allows us to see their trades. That allows us to see their participation on any of the purchases that they do or the sales that they do. And that data is now being condensed and being brought into typical insights and analytics reports that we can share with potential investors that who wants to see the landscape and what it looks like and how favorable it is.
So who is the custodian of that data? Is Momo a client of TransUnion and providing you with data, or is that data that I get the analytics from Momo? Where is that? Who's the custodian of that data?
So it still sits within the telcos, but we are having discussions around having access to that data, and it sort of enables, or it sort of enriches all the other data sets that we already have. TransUnion, by virtue of being a credit bureau, we sit with tons of financial data across the market, tons of it, right? Be it in Rwanda, in Kenya, Zambia, Malawi, etc. We understand the credit health of any institution or any individual. So we are able to actually give visibility to that. And one of our goals is to get access to some of these alternative data sources that can allow us to, create better visibility in terms of insights and analytics. But most of the work is already underway, Tracy. If anybody wants to understand more, wants to be enabled more, wants to get comfort more, we're able to give comfort through other institutions like RURA, for instance, the Rwanda regulator for telcos. They've got some of the information that can be made available. But what I can give comfort, Tracy, is I think it's important for investors to know that there is structure, right?
Yeah.
If you need access to any information, there are institutions that are available all the way from the central bank, like for instance in Rwanda, all the way, and it's a very friendly, if I can use that word, central bank. You can get any information that you want in respect to the economic framework of the country. So any investor who wants to understand, deep dive for a particular sector, for a particular service, they're able to reach out and they'll get the support. Yeah.
Because I know you're right. When I was in Kenya and Rwanda this summer, the adoption rate with MoMA and the other apps, mobile apps, it's just, it reminds me of China. China has WeChat, right? And everything is WeChat. So you have all of this data. And that's what it reminded me of when I was there. Just everyone used it for everything. So there's a wealth of data there. The question is that data, how, to the extent is that data being mined and the analysis and all of the analytics on that data? But that data is definitely there. I wanted to ask, and I think you've kind of alluded to this, but I want to peel back, and you're spot on, right? Africa is 54 countries, 55 countries, right? Yeah. So everyone is different, and I appreciate that. But focusing on East Africa, what are some of the insights? Because you've been with TransUnion, you mentioned, over a decade, right? So you've seen and analyzed a lot of data about consumers. So what are some of the key things that have bubbled up to the surface that's unique about the African consumer compared to other consumers that's unique about it?
Yeah, so I mean, good question, Tracy. Funny enough, we actually ran a consumer pulse survey, and what I'll also do, Tracy, is I will share with you a few of these reports that we've done in the East African market, and we focus a lot around understanding the buying behavior, understanding household income structures, understanding, what also some of these consumers struggle or stress with in respect to their own household income or, access to finance. But the consumer in the Eastern Bloc is very much more of you could almost say an awakened dragon, if you could call it that, right? Remember, these are people that are catching up to some of the, economic nuances, some of the products, some of the services that have predominantly not been available, and they're really much now starting to see having access to this. So the buying power is starting to be very much in the hands of the consumer. Consumers are asking for services, they're asking for products, and what I like the most is that they are aware, Tracy. They are aware about their needs. They are aware about what they need to change the livelihoods of their own families. So you've got empowered consumers through regulatory aspects. The regulator is very much hands down in ensuring that consumers should not be abused in terms of, their interaction with different service providers. But equally, the consumers are aware of their own rights. The consumers have started to become more financially liberated. So the buying power is now more within the, consumer of, I would call it the East African bloc. There's so much of capacity. There's so much of enabled aspect. But one of the things we are working with some of these consumers, Tracy, is the value chain, especially to do with the literacy around financial products. So yes, they have They have money, some of them, they have buying power, but is it enough to get them to the promised land? So for instance, if you think about investments and savings, so we have created your ability to have access to money. Now we want to create the ability for you to invest and to save for future. So that's some of the discourse that you start to see happening in the Eastern Bloc. Couple of young fintech companies coming up with solutions that actually enable savings and investments and getting, capital markets to be a little bit more active from a consumer-facing side more than from a corporate-facing side, because they've understood that buying power, they've understood the hunger to do more from consumers. And I don't know if that gives you a comfort around the question, Tracy.
Well, it does. And speaking of buying power, we're approaching over $2 trillion in buying power. I mean, that number cannot be ignored.
Absolutely.
So that's huge. And I just want to touch on the SMEs because I know quite a few SMEs in Rwanda. I mean, Rwanda is priding itself with Norshkin's Kigali House of being the hub of East Africa. So a lot of entrepreneurs, a lot of SMEs, but access to credit, that's been a huge factor or barrier because of interest rates, right? I'm speaking of one company that I know specifically, a struggle for them. So is TransUnion involved in helping to understand providing more access around there? Are you working with the banks? What do you say to, the SMEs who are really trying to expand their credit opportunities, right? They're, to your point, they're savvy, but they're running into these blocks with the high interest rates, for example.
Funny enough, Tracy, good question. 2 weeks back, the government, through the Ministry of ICT, launched the fintech strategy for Rwanda, right? And the fintech strategy harnesses or looks a lot more around how do we create visibility to the different aspects of bit fintechs companies that can create enablement. Remember, what's happening within the SMEs, like I mentioned earlier on, is most of these small entities, they're unstructured. They don't store data in the most easiest and structured manner that shows their profitability. Now, when you go to the banks are very rudimental, very conventional. They want structured data for them to make risk-based decisions. So that conversation has been a missing link between the borrowers and the lenders, especially in the space of the SMEs. But there's hope, Tracy, because we've started a lot of work with the central bank in the country, with the Ministry of ICT, with other market actors to try and start capturing, and some of the small actors have already started to enable these SMEs with the ability to store data differently and in the most easiest, right? In the most easiest and accessible manner possible, so that when the need arises for anybody to look at an SME books, for instance, basic journal, like, your sales versus your cost lines and all of that, they can actually be able to produce that at the click of their button. Got a couple of SMEs that are fintech driven that were testing some of these solutions in the sandbox for the central bank. That will actually start empowering SMEs. So it's not to say the bankers don't want to lend money. It's not to say the SMEs don't want to have the ability to receive funding. It's almost like it was a broken record, right? On the one side, I need comfort that if I lend you, you have the ability to give back. On the other side, I don't have the tools to capture the data that you need to make an informed decision. That's where TransUnion and other actors were coming in to create that visibility in the most structured manner that the banks can actually now use to lend. So there are a couple of solutions that are on the horizon, and I'm so happy that 2025 will show a lot of that in empowering the SMEs.
Yeah, because, that seems like an opportunity from a foreign investor perspective, right? If you can come in with, lower rates. But again, it goes back to the data, having access to auditable data, right, to ensure the integrity of the data. So it really comes back to that. So I guess one of the things that I'm really impressed about is the African Continental Free Trade Area, right? And for my viewers, this is really at its highest level. It's a trade agreement that will allow free trade between African countries that have signed and ratified the agreement, right? So I'm wondering, what is that going to do for I understand from a business perspective, obviously from a tax perspective, what it does, but what does it do for the consumer, do you think? How does it hit some of those things that you were mentioning around inclusion and access?
I think more than anything else, create a market, transparency, a transparent market for everybody. Tracy, the beautiful thing about Africa, and I don't mean to go back in history, but the beautiful thing about Africa is that, there's a term called barter trade that we used to have back in the days where I have something you don't have, I give you in exchange with what you have. You could almost look at it in that way, right? It's like the reincarnation of barter trade. Consumers in East Africa will be able to enjoy products that are from West Africa within the most equitable, or rather economically viable means.
Okay.
Right?
Okay.
Because right now, like you mentioned, taxes, so consumers, producers struggle to send their goods across to other countries. The flight hour between Rwanda and Nairobi is 1 hour, but the cost is enormous. So imagine if you were to think about sending produce to Kenya from Rwanda, the cost of your goods just landing in Kenya, it's expensive. So the limitations is what was, our biggest China wall, if you want to call it that. Now with this agreement, goods and services will be able to be moved across different countries, and we will enjoy each other, each other's goods, each other's products in the most economically viable manner. So for the consumer, they might not have been to Tanzania, Dar es Salaam, but they'll be able to enjoy a product that is manufactured or that is homegrown in Tanzania at a most affordable rate.
That's huge. So thanks for sharing that with me. I'm just curious. So again, I am always looking at this from things through an investor lens, because I really believe very deeply that the investment of capitals, foreign capital especially, will help Africa's economic development. So what do you think, if you had an audience, let's say Melody Hobson, right, and others of that nature, and you were making your pitch for why they should really look into investment in Africa, based on consumer and consumer data and purchasing power, what would your pitch be?
My pitch would be, you've got everything you've done in America in Europe. Africa is still literally kicking off. This is where value for your money will actually be realized. You've got people that are hungry to consume new products, people that are hungry to consume new services. Some of these folks might never be able to travel the continents, but they could be able to enjoy access to goods, services, products from other, continental countries. I would say Africa is literally the next best thing. If you're not thinking about Africa as your economic empowerment partner, then you're missing it out, right? You've got consumers that are starting to be educated. You've got consumers that are within the employable age. So that gives you, leverage.
If Africa's not on your radar from purely purchasing power, consumer, and that young population, then you may miss the boat. So thank you so much. Before we wrap up, I'd like to close with saying one thing that you are inspired about that's happening on the continent?
Well, look, Africa is very aspirational. And I'll give you an example. Right now, we just hosted the Formula One Gala in Rwanda just yesterday with President Kagame. And we are really hopeful to bring the next Formula One to Africa. Just showing you how aspirational and how we believe we can play at the same level as everybody else. So watch the space.
Thank you so much for joining today. Please go to solvinglocally.com, #African Success. Thank you.